Hey guys, this is June Collier, and I wanted to shoot this quick video to continue on from the last video where I talked about purchasing LEAPS. And a LEAP is nothing more than a long-term equity anticipated position or security. And so what I wanted to chat about is how trading a LEAP can be very, very beneficial for you. And unlike what most people think, I'm not in and out of the stock market every day. I'm not even in and out of the stock market on a week-to-week basis. And so I trade long-term, but I trade long-term, and I'm very specific about what I trade. And the other thing is that you have to be mindful of who your teacher is and what their risk tolerance is. So I like to call myself a conservative aggressive. And that doesn't make any sense, but I'm very conservative. But because I do trade options, I like to call that kind of aggressive. But I'm conservative in the aggressiveness that I use for my trades. And so what I wanted to do is I wanted to share with you the trade that I recently closed out last week when we talked. You guys know that I have bought 6 contracts of XLK. And these were the January 21st, 2022 105 call. And so that meant that I could purchase XLK at 105 at any time that I wanted to up until January 21st of 2022. I also told you that I love to be out of my LEAPS 6 months prior to expiration. I like to have that 6-month buffer because of the time value. As I get closer to the expiration of the contract, the time value starts to eat away at the profit. And so I like to be out within 6 months. So what does that mean? That means that I'm usually purchasing a LEAP that is 18 months or longer. 18 months or longer. So you'll see in this situation, I closed out on August 6th. That was on Friday. And I sold the stock. And you'll see that my cost basis was $9,400. My proceeds was $30,000. Okay, so I spent $9,000 and $9,500 to make $30,000 in the course of about a year and a month. And so we see that the proceeds that I made $20,000 profit off of that $9,000. If I do the percentage, that would come out to a 218% return in about a year. The other thing that I did not show you is waste management. So I picked up waste management last year, and I purchased the January 21st, 2022 115 call for waste management. I actually ended up paying about $1,500 for it, and I made $3,200. So that's a 106% return in 1 year. So you can see that this was 218%. This was 106% return in 1 year. And again, I went ahead and dumped waste management back on Friday because I just don't want to wait until the last minute where the time value could potentially eat away at my proceeds. So 100% on one trade, 200% on another. Waste management actually had me worried because at one point this trade was a negative trade. If you look back maybe 8 months ago, I was negative on this particular trade, but it has turned around and I decided to go ahead and get out of the trade. Now there's another trade that I have I want to share with you. This trade is still active. This trade is the Microsoft January 21, 2022. So you'll see that I pretty much purchased all of these around about the same time, and I purchased the LEAP on the same expiration date. So back then, or I can purchase Microsoft at $185 a share up until January 21, 2022. So we've got a little over 5 months left before this contract expires. I did only buy one contract on this. You'll see that I opened this up back in February of 2020. So it's been about 18 months maybe that this has been that I've been in this particular trade. It cost me $27.44 a share. One contract means that's 100 shares. Today the price is $104. So I've grown from $27 to $104. My cost basis back then, I spent $2,700. The total market value of it is $10,400. So in about 18 months, I've turned $2,700 into $10,000. That is a $7,658 gain. If we look percentage-wise, that's 279% that I've made on that particular trade in less than 2 years, about a year and a half. Now, I should be getting out of this trade, right? I don't even know why I'm still sitting in this trade. I love Microsoft. I think it can go higher, but this is greed here that has kept me here up to this point. I may put a stop loss on it or trailing stop loss on this particular trade. I don't know just yet. I'm very, very in favor with Microsoft. My mind, though, tells me to go ahead and follow through and sell this because, again, I'm within 6 months of this contract expiring. So here in just 3 trades, you've seen one trade that has had over 100% return. You've seen another trade that's 217%, and then this trade is 279%. Purchasing long-term options, long-term calls. We call them LEAPS, long-term equity anticipation securities. And so, this is what really has helped my portfolio grow very, very fast and put me in the position that I'm in. I want to create a video that talks about what do I do after I collect these premiums or when I cash in. How do I go and set up my next set of trades? Because this is 10,000. The other one was 30,000. What did I make here? And then 3,000. So that's $33,000 that's coming back into my account. What do I do with that $33,000? And so we're going to talk about that in my next video. One of the things that I got from people was they said, well, what about taxes? Do you have to pay taxes on these gains that you've made? You've made a considerable amount of gains. Do you have to pay taxes? The answer is yes. You always got to pay taxes. However, one of the things that you'll see is that these trades are actually inside of my retirement account. So this is a rollover IRA, and then this one is a Roth IRA. So what does that mean? That means that I can trade in and out without having any tax liability until I get ready to pull the money out at retirement. So, and then that doesn't even come into play with the Roth. So I don't have to worry about that. So taxes I don't necessarily worry about right now because I'm trading this inside of my tax deferred plan. The other reason why I like LEAPS is that I never have to pay short-term capital gains because I'm always keeping it longer than a year. That's the goal, at least. Sometimes I do get rid of a LEAP a little bit early, but in most cases, I'm going to keep it long-term. So even if it was not in a tax-deferred account, I still would not have to pay short-term capital gains on it. I would end up paying long-term capital gains on any of my gains. So this is just an easy way for you to take a look at LEAPS. And again, we've got a stock class that is actually going on right now. Today is Monday, August 12th. I believe today is August 12th. August 9th. August 9th. Today is August 9th. And we've got a stock class that started today. We will do our live training on that stock class on August 12th, which is Thursday. We'll do the live training on Thursday. If you're still interested in getting in on the stock class, even though we've already started, you still got time to get on board. And if you like to do that, make sure you send me a message I'll make sure that you can get in and get started immediately. So this is Joe Collier signing out. God bless, take care, and we'll chat with you guys soon.